Hello and welcome to Business Incorporated live on Channels Television. It's the start of the trading week right here in Lagos, Nigeria. Here's what's coming up in the next 55 minutes. Ghana's public debt dipped significantly, now standing at 736 billion Ghana cedis. And we gauge expectations as South Africa's president signs controversial land seizure law. And Bitcoin's sharp drop sparks $132 million in liquidation amid market volatility. And it's great to have you join us. I'm Ladi Williams. Let's get a check on the markets now. Talking about volatility, we see oil prices took a sharp dip today, falling over 1% as after U.S. President Donald Trump urged OPEC to lower prices following his bold push to ramp up U.S. oil and gas production during his first week in office. So much has happened since then, and the markets are feeling the impact. 1.11% dip there for Brent, $77.63 a barrel. Hope that translates to lower prices for PMS now that we're seeing pressure. Before, we know why the PMS prices were trending up, because the prices were going up, but now they're going down, so we'll see. U.S. grade there, WTI, $73.77 a barrel, a bigger drop of 1.19%. So Trump's comments calling for OPEC to slash oil prices, that's aimed at putting pressure on Russia's finances and accelerating an end to the ongoing war in Ukraine. So all eyes now on what President Trump says, because we're seeing the impact on the market. Let's get a check on what's playing out with metals now. See, gold prices slipped. Weighed down by stronger U.S. dollars. Investors are turning their attention to the Federal Reserve's first meeting of 2025. That's coming up this Wednesday. 0.60% down. That's for spot gold, $2,755. U.S. gold futures, $2,761, also down 0.60%. All metals we track, all down today. Spot silver not left out, $30.26 per ounce. Platinum, 0.60%. The bigger drop we have is with palladium, 2.10% down, $967, losing that $1,000 psychological level. We know the dollar gained about 0.3% following President Trump's announcement of sweeping measures against Colombia, including tariffs and sanctions. That put pressure on gold, which becomes pricier for holders of other currencies. That's when the dollar strengthens. We know that inverse relationship. Same thing impacted Bitcoin. So the markets were roiled this morning. To other stories now. The Securities and Exchange Commission in Nigeria has issued a strong warning to the public, advising against any investment dealings with RiseVest, that Cooperative Multi-Purpose Society Limited, and STEX. That's a multi-purpose cooperative society, also known as STEX. According to the SEC, neither organization is registered or authorized to operate within Nigeria's capital market. In a circular release over the weekend in Abuja, the Commission expressed concern over RiseVest, which has been actively promoting various investment schemes to the public. Similarly, that's STEX has been luring investors with its STEX Commodity Mudaraba Investment Series 1. So the SEC emphasized that these entities are not legally permitted to engage in such activities, urging Nigerians to exercise caution and avoid any transactions with them. And it's still the season of economic outlooks, and the Catholic Women Organization is the latest to review and strategize for 2025. With economists and consultants to guide the conversation, the CWO at Church of Assumption in Lagos, they brace up for this the year with not just workable strategies, but also spiritual empowerment. Take a listen.
Knowledge of the economy and strategies to navigate in harsh times is everyone's concern. That's why the Catholic Women Organization is holding its maiden annual summit. The women say it's a platform to connect faith to works and steps to build resilience. Individuals with relevant information are lined up for the meeting, beginning with economist and Chief Executive Officer of Financial Derivatives Company, Mr. Bismarck Rewani.
I've pointed out to you that the level of disequilibrium has reduced. What it means in economics is that the next change is not going to be as violent as the previous change, because the gap between the true market and the market is very narrow.
Information received, however, faith and resilience is in the mix, but women are still challenged to take up steps.
Do you have what it takes to energize and ignite that grace to act for you? Grace is a quantum of power.
And even here, the topic of gender equality comes up.
We're all challenged. We all have collective responsibility to make sure that our women folk are empowered.
When I started, somebody saw something in me and said, no, this will not be a man's thing alone. Let us try a woman. If the woman did not develop herself to make herself what it is to be a leader, nobody will see you. You have to make yourself relevant.
The Catholic Women Organization believes that talks like this have become necessary to face Nigeria's economic realities.
Not just 2025, we're looking up to 2027, because even the government, the political clout of the government is thinking of 2027. We too have to be thinking of 2025 to 2027 to be realistic. And even at the lowest level and at the high level, we all have to be agents of change.
The event is set to be held annually with themes that reflect current economic situations.
And now to our first conversation. In a historic move, South Africa's President Cyril Ramaphosa has signed a bill into law that enables the government to seize land without compensation. This controversial step aims to address the lingering legacy of apartheid, where vast portions of the nation's farmland remain under the control of the white minority, despite the end of apartheid over 30 years ago. Well, joining us to unpack this is Dr. Sikelelo Breakfast. He's a political analyst in South Africa. Great to have you on the show.
Thank you very much for having me.
So tell me, what is this new law on land expropriation without compensation? What does it aim to address, and why is it seen as a significant step in South Africa's post-apartheid transformation?
So South Africa has a history of land disposition, which is informed by the Land Act of 1913 and the Group Areas Act of 1950. So the land was taken away in the past from the majority. And the issue of land disposition has to do also with inequality, because if you have land and you have property, from time to time that incurs interest and it benefits the owner. And the majority of people who are owning land and who are owning property are people of a particular race. And the majority of people who are landless are also people of another race. And that increases the disparity along racial lines. So the Constitution of South Africa, which was adopted in 1996, acknowledges the historical injustices and seeks to redress. So that is the background to the Act. So what it says is that Section 25, that the government has a right to expropriate land under two conditions: for public use and also for public purpose. But that has to be in line with the market value of the land that is taken away. So that is the background to the policy.
If the government is trying to take that land to make money with it, Is that not allowed?
Sorry, can you repeat that?
I said if the government is trying to take the land for commercial purposes, is that allowed under this law?
Yes, yes, yes. It is, but the problem is the past has been the fact that the people who have benefited from the land disposition tend to be reluctant in terms of giving away the land. And that tends to be the problem. But also the people who benefit from the land that is taken away from the people who illegally benefited from it, they tend to be ill-equipped in terms of utilizing the land that they're given. So maybe there needs to be a follow-up in terms of capacitating the people who will be benefiting from the land that is given to them.
All right, so looking at it from the arguments at this point, what are the key arguments for and against this law, particularly within the coalition government, and how might this division impact the law's future implementation?
Yeah, so the policy might be taken on a review because not all the coalition partners, they speak the same language, largely because the coalition arrangement is drawn across the political spectrum. For instance, you have a party like the DA that believes in a marketization, that private property should be the order of the day. And then you have the ANC that believes in mixed economy, that development must be driven by the state. But I don't think that this policy will make the coalition arrangement to fall apart, given the fact that there are also other political parties who are more radical than those in the coalition arrangement who would like to join forces with the ANC. So there is a lot that is at stake. There is also another forum that is meant to ventilate disagreements, which is the conflict management dispute forum for political parties which are unhappy about certain policies. I think they will explore that avenue as opposed to walking out of the GNU.
All right, so, given the challenges to the law by some, government members, what legal or political hurdles could the bill face, moving forward?
Yeah, I mean, I think the way out will be to address the problem and depersonalize issues, attack the problem hard and be soft on the parties. I think this is an issue that can not be left unexplored, given the fact that it is tied to the economy of the country, and it's a historical injustice, even though it is a source of conflict if it is not addressed properly. I'm sure you are well aware about the conflict that is underway between Israel and Palestine because of the land question. So the issue of land is a very emotive issue, which requires a good conflict management mechanism, but it's something that cannot be ignored in order for the country to go forward.
Right, definitely. People don't play with lands in any country, with what we've seen, happen so far. So tell me, how do you think, foreign investors, are seeing all of this as playing out with this new land law?
Yeah, I mean, we had Donald Trump actually in his first term posing a threat to the administration of Ramaphosa that he was going to pull the plug in terms of investment if the country doesn't address this issue in a way that is fair and square to the white section of the population in particular, because you must remember there is a section of the population that went to see Donald Trump, AfriForum, and ventilated its discontentment to him. So there are people who are unhappy about the way things are in terms of the land reform or the land question. But I think government also has been traveling throughout the length and the breadth of the world, trying to cool off investors, that everything will be done within the context of the constitution of the country.
Yeah, so much to look out for with that issue. We know right now President Donald Trump is armed with a tariff whip. At this point, Colombia felt that impact earlier today. So we'll keep watching to see how this plays out. But thank you so much. It was great having you perspective.
very much, sir.
That was Dr. Sikelelo Breakfast as a political analyst in South Africa. Thank you so much.
Thank you very much, sir.
All right, we'll take a break now. When we come back, we're going to head straight to the trading floor right there at Custom Street, and we'll have John McQuarrie giving us details on what's playing out. That's in a moment. Just stay with us. All right, let's head straight to the trading floor now. We have John McQuarrie on that side of things. Ini, you've been at the stock exchange since morning, so I can believe you've absorbed all of that energy, and you can tell us what's playing out there with the local boss and most of the markets we track.
Yeah, thank you so much, Ladi. Yes, I've been here, and I can tell you that the world has gone virtual. COVID has changed the world, because even here at the exchange, if you were to head to the floor of the exchange at this time, you would see just a handful of stockbrokers. You know, a lot of things, a lot of the trading is done virtually, you know, so it's quite empty for the floor of the stock exchange, but we know the activities are still going on. But that's not where we're going to this afternoon. We're going to look, it's Monday, so we want to see our Naira. So earlier today, we did see good news talking about the trading of the Naira. We saw that the Naira gained at the close of trade next week. And then, well, still keeping us around that 1,500 for the official platforms. I cannot say the same as I said earlier today for the parallel market. But we have Ikwe here to tell us, he's a fixed income dealer with Access Bank. So we see that the EFM platform seems to be giving a lot of value, or consistent value, or certainty, I guess is a better way to capture it, on the Naira. Even though we still see it, there's a bit of a difference between the official and the unofficial. But generally, we seem to be in a comfortable place. I don't know if that's how you see, you know, trading the Naira at this time.
Thank you for having me, Ini. So definitely, I must credit the CBN administration for launching that e-firms platform. It has really helped a lot, especially with transparency of the Naira. That transparency has also led to improvements in liquidity, and that liquidity that's available in the official market has led to stability, as you said in your opening. So that Naira has been stable just around between 1,500, 1,550 levels for the past 2 months, and we like it. That's one of the key complaints of that when they started their reforms, that the volatility has been too much. So for the past 2 months, it has been quite stable at those levels, which is a testament to the effectiveness of the e-firms platform.
So does this tell us that a lot of the negative news we're getting from the market was artificial or illegal activities? Because I don't know if we can say that our supply of FX has increased, or is it just this new platform has helped to block some of those leakages? That's why we're seeing a level of uncertainty.
Well, there are a few reasons why we are where we are now. Definitely, they've reduced the opportunity for FX speculators in the market, also reduced that artificial arbitrage that was created when there was a lack of liquidity. And that lack of liquidity led to the increased spread in that market, which like a vicious cycle. It just continues. When the liquidity is not there, the spread continues to increase, and the arbitrage opportunities persist. But with the e-firms platform right now, they've created that transparency that allows the Naira to be appropriately priced, and then we see, which has now led to increased supply. I can tell you that last week, Friday, we saw the highest volume traded in the official market at about 613 billion this year. And last week, the weekly volumes was also the highest we've seen this year. So the liquidity has increased. The supply is coming in, especially from foreign portfolio investors who like where the Naira is and where the yields are in Nigeria this time.
So with this now, can we say we're at a comfortable place? Because before now, you know, what the conversation was always, we just need to increase supply,
yes.
You know. Can we say we're all right where we are?
I won't say we're all right. There's still a bit of work to do. As you said earlier, there's still a bit of gap between the official rates and the parallel rates, but the supply is there. They're putting in the work. If they maintain this tight monetary policy they are currently on right now, we'll reach the promised land very soon. I'll show you of that.
But some people still say that the Naira is undervalued. What would you say would be a fair value, or are we there already?
Most people, fair value of the Naira, if you look at it, if you use purchasing power parity or other models to value Naira, most people say it should be between 1,000 and 1,200. A simple example is the price of fuel. Fuel on the street right now is about 950 to 990 Naira, depending on where you buy it from. And most other countries, if you benchmark it, it's about $1 or more, $1.10 or $1.20 in the street. So if you benchmark it like that, it's just a simple analogy. The fair value of Naira should be maybe between around 1,000 to 1,200. So there are some people that feel, yes, Naira is undervalued, but that's what makes the foreign guys like it, because it helps Nigerian exports. Things are cheaper here for them, so they bring in their dollars, as you saw in that December. Yeah, people bring in their dollars and they have a lot of Naira.
Yeah, but unfortunately, we cannot say that we are maximizing it as Nigeria, because if our exports is cheaper, then we should be able to increase our volume, to meet up with that.
Yeah, the government is working on that. They are pushing the oil production. They want to push that to maybe about 1.5 billion barrels a day. So they want to take advantage of the weakness of the Naira right now.
Okay, so where do you see the Naira, let's say first quarter, at this rate? We see stability to a large extent for months now, especially in the official market, and that spills to the parallel market also to a large extent. Yeah. Where do you see the Naira settling?
For Q1, my expectation that it should remain where it is just around 1.5.
And you think we'll be good with that?
Yeah, we'll be good with that. But generally, for the rest of the year, a lot of people still feel there's still room to appreciate towards the end of the year. But the federal government has even given an indication of where they feel the Naira should be this year at 1,500 levels.
So you decide to be realistic, I guess?
Yeah.
All right, Kipe, thank you so much for your time.
Thank you for having me
on the program.
Yeah.
All right, now let's look at other market numbers. As I said, we're here at the NGX. It's mostly virtual trading going on, but it's a positive one for the NGX intraday. This was just about 30 minutes or so ago, so it's 0.20%, 103,000. Last week we did lose that 103,000 level, but thankfully we have recovered that, so it's 103,809.06 for the NGX. From there, we move to the Johannesburg Stock Exchange, where it's negative intraday 0.46% in the red. 83,903.95 is your share. For Egypt, of course, we know it's closed, 0.47% in the negative. 29,893.67 for Nairobi Stock Exchange. Yeah, they keep growing. Now they're at 102 level, 102.48 after they gained 0.40%. Beg your pardon. That's one that's yesterday's numbers. Egypt is trading at this time, but the Nairobi is the one you have from Friday. Then we move to the Middle East. In the Middle East, we see Dubai. Dubai is negative this afternoon, 0.50% at 5,199.28. Abu Dhabi follows suit, 0.10% in the red, 9,554.33. Tadawul of Saudi Arabia is on the flip side, 0.30% at 12,423.04. Qatar also is positive, 0.05%, 10,656.22. So we see mixed, it's just the mixed sentiment for the Middle East markets. We know that some of them are closed because of time difference. So a market like Qatar, they're close positive right there. Now in Asia, we see the Nikkei of Japan is almost 1% in the red. I learned conversations around President Trump, China, AI is moving markets around that area. So we shouldn't be surprised to see some extreme sentiment. But Nikkei for now, close of trade, obviously 0.99%. Hang Seng Index is 0.66% in the positive area, 20,197.77. The Kospi is almost 1% in the positive zone, 0.85%, while Shanghai and Nifty, Nifty has been going down. I think they do have a budget meeting this week, later on this week. Expectations and tips from there, from India, is moving the market not so friendly. In fact, I believe analysts are saying that it could get down to about 22 or less than 22, which is a resistant point. So it's more than 1%, 1.08%. That's the Nifty at this time. Move to the United States, where President Trump is. Yes, the man of the hour. The Dow Jones is negative 0.85% at 44,222. S&P 500 also negative, almost 2% in the negative. As I said, the conversation around AI and all of that is moving the market and sentiment, investor sentiment. NASDAQ is also very, very negative, 3.3% at 21,185.25. So those are the market numbers at this time. In some parts of the world, it's closing numbers. In other parts, it's intraday numbers. Ladi, President Trump is not done with the world yet. He's still moving markets. I see your Bitcoin dropping fast. I wonder what conversation you would have later on the program when you're doing the crypto segment.
Yeah, so much to unpack today. It's all about the fear of tariffs at this point. And we've seen Trump jolt the markets this morning, and all eyes now wondering.
I wonder if Vladi can hear me.
Yeah, we're just wondering where the bottom will be at this point. But thank you so much, Amy, there, for giving us all the details of what's playing out with most of the markets that we track. Thank you so much, Ini. All right, let's get a check on other stories now in the market. So we're seeing in Ghana, we see for the first time in its history, Ghana achieved an annual trade surplus about 5 driven by a surge in gold exports. The country's merchandise export that outpaced imports. The country's merchandise exports also outpaced imports, marking a significant jump from a $2.7 billion surplus in 2023, according to the Bank of Ghana's latest economic and financial report. Gold shipments from Africa's leading producer of the precious metals soared by over 50%, reaching an impressive $11.6 billion last year. This milestone underscores the growing importance of gold to Ghana's economy and its impact on the nation's trade balance. Ghana's public debt, so we're seeing, we've got news there on Ghana's public debt. The debt stock has dropped to 736.0 billion Ghana cedis in November 2024, down from 761.10 billion Ghana cedis in October 2024. And that's according to latest figures from the Bank of Ghana's January 2025 summary of economic and financial data. This marks a 3.3% decrease within just 1 month, signaling progress in the country's efforts to stabilize its fiscal position. The reduction is also attributed to adjustments in both external and domestic debt levels during that period. So good news there for Ghana with their debt dropping. All right, let's get a check on what's playing out in Europe now. We have Lars Holter right there in Berlin. Great to have you, Lars. So we see sustainability is a key word in corporate world. This year in Germany, we see companies working hard to switch to alternative energies, fulfill climate goals, but also keep in mind, social policies to satisfy workers as well as, minorities. So it's all good and well, but with more rules and, initiatives popping up, some are worried about what it all does to the economy. Lars, talk to me now. What would you say are the worries of these companies, right now?
Yeah, hi Lottie, and thanks for having me. You put it well with what you already said. What we're looking at with some of the regulation in terms of sustainability out of Brussels is just really too much. And you said it right there, just from what you just mentioned, it is a lot. And what we're looking at right now, and particularly this week from an EU perspective, is the so-called Corporate Sustainability Reporting Directive. Sounds complicated already. It's a new rule that sends shockwaves really through the corporate world. Here's why. The directive here, commonly referred to as the CSRD, is a set of rules that tell companies how to file their annual reports on sustainability, how to report all the measures that they undertake and what their effect is. Now, we're looking at some environmental goals, of course, many regarding air and water purity, CO2 emissions, all somewhat straightforward. But then there's tons of rules, some of which you just kind of touched on, regarding the protection of minorities, the inclusion. It comes down to indigenous people, whistleblowers. Now, all of the points in this directive, Ladi, are very important and valid points. Of course, any company wants to make sure and should ensure that the rights of indigenous people aren't abused in their supply chain, for example, or that they're not working with, let's say, resources mined by oppressed people or by children. So any way you look at it, this entire idea of sustainability in environmental and also in social terms is good, but it also costs a ton of money, and many are saying that the cost far outweighs the benefits.
And talking about the cost, what are we looking at here?
Yeah, I didn't hear you, but I can give you a little bit more detail here.
Yeah, what the
because
cost is like.
I
Yes.
think I should tell you. Yes, the cost, exactly, Ladi, and that's interesting. It's quite shocking just looking at the headline number. This CSRD is estimated to cost around 1.6 billion euros. And don't get me wrong, that is not for the measures taken by these companies to achieve certain important goals. Now, that is the cost of reporting these efforts correctly. So we're talking about a giant bureaucracy. We're talking about companies needing teams of experts that likely take months to prepare the reports that the EU is asking for. Now, here's a couple more numbers for you. The directive alone has 66 pages, but the complementary provisions that come with it take up another 285 pages. And then the provisions on formatting the reports that say what exact positions need to put in the reports and where. That's another 800 pages long. That's hundreds and hundreds of pages that need to be worked and adhered by. There's also a list of 1,200 criteria that should be considered for reporting, all of which has to be followed to a T, because all of this has to also be checked and verified by external accountants. And that's, of course, another cost position. All in all, it's clear, Ladi, that the new EU reporting rules are so complicated that adhering to them in itself is almost not sustainable.
Right. You know, at this point, it just tells you the EU is really not playing at all with all of this corporates. But how are investors playing out this new trading week in Europe?
It's interesting. It is a new week indeed, and it suddenly looks like we're going to be in an entirely different time after an extremely impressive rally over the past few months. Ladi, stocks are now under pressure. DAX is down by a little bit over 1%. And what's especially weak today is tech shares. Now, that's not necessarily a German or an EU thing, but we're dealing with some news here that have shocked the market. It's an AI developed in China that came out over the weekend that has impressed experts. It's called DeepSeek. It was developed for just around $5 million, and that is a fraction of what US companies are currently investing. This new China-made AI is apparently fast, good, and interestingly enough, especially considering we're talking about China here, it seems to be transparent too. Now, tech shares are down around 7% in many cases. And looking at trading in Frankfurt, tech also weak here, but within the DAX, we see Siemens Energy as the biggest loser. It's down about 20% at times. And then there's chemical giant BASF, also down after disappointing numbers.
All right, thank you so much, Lars. Definitely so much to look out for in these markets with the tariff jitters all over the place. Thank you so much, Lars Halter.
Thank you, Ladi. Thanks.
All right, to another conversation now. We see the introduction of South Africa's first pay-per-use PET-CT scanner marks a groundbreaking moment in the country's healthcare system, offering a solution that could, reshape the access to advanced medical technology across the region. Well, joining us to unpack this, we have Imran Sumra, as the CEO of Ease, joining me via Zoom. Great to have you on the show, Imran. But could you briefly explain what makes the introduction, of South Africa's first pay-per-use PET-CT scanner? What makes it revolutionary, in the healthcare sector in that region?
Well, good afternoon, and thank you for having me on your show. I think you've used the right words. It's revolutionary, it's groundbreaking, it's history-making. And why is that? Because, well, for two reasons. Firstly, because we've deployed state-of-the-art machinery in this device called a PET-CT. What makes it state-of-the-art? It is basically a machine that uses dual imaging to assess what's inside a patient's body, to understand, in particular, the presence of cancer and other diseases. It is minimally invasive, and so it improves the ability to assess and early diagnose cancer amongst other conditions. And it's revolutionary because it's the first in that region, in the northwest region of the country. But secondly, we've deployed this not on a traditional basis where the physician acquires the machine, but we've deployed this machine on a partnership basis using Ease's pay-per-use model, which essentially means that we acquire the machine on behalf of the physician, and then the physician only pays for the usage of the machine as and when they use the machine. So it links itself quite nicely to the medical reimbursement model. And so, as I said, on those two bases, that's, that for us is why this is significantly groundbreaking, in particular for South Africa.
Right, and, at the end of the day, I guess it's still going to cost you something, to use this device. But how does the pay-per-use model, how does it eliminate barriers to, accessing advanced medical technology?
Well, as you've indicated, one of the significant barriers to advanced medical technology, particularly on the African continent, is the need to have a significant upfront funding. And so, in a traditional situation, there's a significant deposit that gets paid up front. And so if you don't have that funding or access to that funding, it inhibits your ability to acquire the state-of-the-art machinery. What Ease's model does is it takes that inhibitor out of the way, in that we acquire the machine. So we do away with the capital expenditure that an institution or a physician may typically incur, and we convert it into very manageable operating expenditure. So, as you know, in the healthcare space, for every event, there's a billable, so you have bloods taken, there's a fee for that. You have a scan taken, and there's a fee for that. And so what our model does is it matches the incoming cash flows with the outgoing cash flows from a machinery usage point of view, in that you then pay as you see revenue inflows. What this does is it outsources effectively the management of the equipment to Ease. So we focus on the equipment and making sure the equipment is available. It allows the treating physician to focus on healthcare, which is their core expertise. What it also does, in removing the barrier, the upfront barrier and the high capital cost need, it allows the deployment of capital into other areas, and in particular in areas that enhance patient care and improve quality outcomes.
Right, and how do you see this generally, impacting, cancer patient care going forward? And do you think this would really help push for affordability? Because that, as you mentioned, is a major, barrier at this point. And do you think there's more that can be done to make, most of these technology more affordable, going forward?
Well, I think from our point of view, what we're starting to do is to certainly make significant inroads in the space. It is not a model that's particularly well adopted on the African continent, because it requires a mind shift away from ownership towards equipment as a service. In the rest of the world, in the US, for example, 3 out of every 10 machines are acquired on this basis. In Europe, 2 out of every 10 machines, and in Africa, it's significantly lower than that. So one of the key shifts that we like to see is a greater adoption of equipment as a service for a very viable solution to improving healthcare and improving access to this type of equipment. Our intent is to roll this model out to build on the successes that we've achieved, not only in South Africa, but also in Ghana, and use that success to deploy machinery in other parts of the continent.
What kind of partnerships are you seeing, in the pipeline going forward? Looking at the African continent when it comes to healthcare affordability, are you seeing more partnerships, coming up and that could help even drive more affordability?
Yes, and I was listening to your show before I came on, and as you are well aware, the continent is constantly faced with economic challenges, with regulatory challenges, and so from our point of view, I think we certainly see the demand. Significant parts of the continent that are underserved from a state-of-the-art equipment point of view. What our model does is it allows not just the providing of the equipment, but also it's an all-in solution. So we take care of the maintenance, we take care of the insurance, and everything relating to ownership. And often some of these things are what result in equipment being dormant in part of the continent. And so, from our point of view, you asked about the pipeline. We're certainly seeing a high level of receptiveness towards this model. It's overcoming the economic challenges and some of the regulatory challenges which we're presently looking at and trying to find solutions in various countries.
Right, and at what point do you see, Africa, producing most of this technology? Are we moving in the right direction in your view?
I think so. Often this kind of adoption, as I said, requires a mind shift change. This is decades of understanding or thinking philosophy, if you like, that we have to own everything that we use. And that shift, I think, is starting to become more and more understood and more prevalent. Certainly in, the organizations that we engage with, those who understand that this is often a question about capital deployment, and if you utilize your capital differently, you can use it to enhance your offering to patients and outsource the equipment management solution to the experts. As a healthcare practitioner, you should be focusing on healthcare and the quality of healthcare for your patients. And I do think that shift is starting to happen. So we're certainly feeling very upbeat and positive about the shift. It is slow progress, but it's significant progress to my mind nonetheless.
All right, thank you so much. It was great having your perspective today, and we definitely hope for better and affordable health care in Africa, going forward. That was Imran Sumras, the CEO of Ease. Thank you so much for coming on the show today.
Thank you for having me. Bye.
All right, so talking about the markets, and the markets are feeling the pinch right now, and with crypto, the crypto market is not left out. With Bitcoin down about 5.42%, with a deep red on the screen, just pockets of green. The pockets of green that you see there are stable coins. Showing you how investors are feeling right now. Some are trying to run into safety, and the stable coin is supposed to offer, that safety, not going up or high, no volatility there, because we're seeing XRP down a massive 10%, regardless of, the big run we've seen from XRP from about 50 cents. It was like a stable coin at some point, but now did get to a high of about over $3 per coin. Ethereum, 7.34% down. So we're seeing big pullbacks at this point. Is it sell the news? We'll definitely find out. All right, let's see what we're expecting this week now. I'm talking about economic data for the week, and mostly in the U.S. This could actually impact the crypto market, and that's in the U.S. We know it's Fed season right there on Wednesday. We're going to get a rate decision, and definitely we know how the rate decision, how it impacts markets. At this point, it's about 2 rate cuts expected in the U.S. This year. From 4. So that's definitely quite hawkish at this point. So all eyes for Wednesday there for the Fed decision. Then we also have U.S. preliminary GDP data. That's out on Thursday. The data comes out on a quarterly basis, and the U.S. economy is expected to have grown about roughly 2.7%. So that's the expectation. Anything below that might cause some jitters there for the market. Then U.S. core PCE index, that's for inflation. is coming with the Fed's favorite inflation measure. That's the one the U.S. Fed like. That's a core personal consumption index. So we're going to be looking out for the numbers there. All of this, definitely investors will be watching for this week, and you can bet that Bitcoin is definitely going to react to all of that. All right, let's bring in Jay Hamid now. She's a journalist at Cryptopolitan. Great to have you on the show, Jay.
Thanks.
So we're seeing Bitcoin struggling at this point. I guess the Trump mania, I think it seems to be wearing off, but some are still blaming what we're seeing today on Trump's tariff on Colombia. He did pull the plug on that, but we're seeing the market already reacting. Do you think investors are just overreacting at this point?
Well, China's DeepSeek has really shaken the US stock market, and Bitcoin is really correlated to it. So every time US stocks get billions, hundreds of billions of dollars shift off their valuation, Bitcoin tends to react strongly to that. It's very sensitive. Its traders are really sensitive. And so after NVIDIA and NASDAQ lost so much when futures trading opened, Bitcoin took that really hard. And some analysts are now even predicting that we might see a dip to $70,000 this week.
Right, definitely. $70,000 of Bitcoin, that's a big drop at this point. We know investors tend to overreact when they see massive drops like that. But, I also spoke to a researcher that said 95,000 could, hold some kind of support for Bitcoin. Do you think that's going to hold short term?
I don't think so. I think we're looking at what I like to call a classic volatility compression. It typically happens before a big price expansion. So if we want Bitcoin to get to our price target of $200,000 anytime this year, this kind of just needs to happen, especially with the Federal Reserve deciding that they're not cutting interest rates. I don't think anyone is bullish this week at all, actually.
Right, because most of the time, some new investors just expect that an asset class like Bitcoin should just keep going up and up and up. But definitely there has to be major pullback. So we're seeing some economic data coming out this week. We also have the lunar holiday in Asia. Do you think Bitcoin will be reacting to any of that? Maybe to the downside?
I think Bitcoin has kind of outgrown reacting to economic data at this point, because of President Trump. I mean, even last week when he made the crypto executive order, the Bitcoin barely reacted at all. I think at this point, the only thing the Bitcoin reacts strongly to is the stock market. And unfortunately, the stock market is kind of cooked at the moment, to put it that way.
Yeah, markets are really spooked. But let's look at the meme coins at this point. We know a lot of, on social media, you can see some traders, flaunting their life-changing profits, from most of these meme coins, even though some say not many enjoyed, some of this profit. So we had the Melania meme Trump, we had Trump's meme coin. Are those forgotten now?
Honestly, I cannot say. At this point, he hasn't said anything about the token. When he was asked about it, he said, I don't know anything about it. So we're not even sure if he was actually the person behind it. And Melania quite literally rug pulled everyone. So I don't think anyone is really into that anymore. Kind of burned everyone in the community. So
because it's quite funny, a lot of investors get burned when they buy most of these meme coins. But for some reason, they keep getting pulled back into it. Why is that?
Honestly, I don't know. I'm part of the people you're talking about. And for me, I think it's just there's really something beautiful and powerful about being a part of something so much bigger than you and being a part of a movement, about taking back control, about financial freedom. So I think for a lot of people, it's just that. It's a rush. It's a rush.
Right, and I'm wondering at some point, do people get tired of the meme coins? Do investors just say, you know what, I'm done with it, at this point, because there are many, many rug pulls, when it comes to meme coins. Do you think it's going to fade away at some point?
Well, it's not like NFTs. So even if you will go out of fashion, I don't think it's going to be anytime soon, especially with, Trump again.
Right. So I guess the meme coins are here to stay. They keep minting thousands of them, daily. But, at this point, everyone was looking towards Elon Musk. He's supposed to be the king of the memes, at this point, but he hasn't done anything. But I think I did see, at some point on X, some kind of scam coin there claiming to be an X token. Do you think we're going to hear anything from Elon soon?
Well, last year he did come out and tell us that he's never going to promote any crypto ever. He said that he only does it as a joke and he doesn't take it seriously and that he's never going to. So I think it's just time that we take him on his word, because he once said that Tesla will not accept Bitcoin again until it surpasses 50% of green energy, and it already has, but he's yet to say anything about it. He hasn't made any crypto related statement in ages. So I don't really think he's focused on us at the moment, unfortunately.
Right. I guess, at this point is just to watch and see. But let's see if at some point traders get tired of the memes. We'll
Hopefully.
see. We'll definitely see. Thank you so much. That was Jay Hamid. She's a journalist at Cryptopolitan. Thank you for coming on today.
Thanks for having me.
All right, so there you have it. The markets we track, we're seeing Bitcoin there struggling, staying low. That's with Ethereum, most of the altcoins that we track, all of them struggling at this point. Let's see if there'll be some kind of respite for Tuesday and the lunar holidays that's coming on Wednesday. Thank you so much for watching. From me and the team right here at Channels HQ, it's bye for now.